Welcome to Mad About Money. Today we're going to talk about the markets and what's happening on the global economy. We'll discuss what's going on with the double dissolution election, and I'll give you our thoughts on the budget. We'll talk about miners, airports and McGrath, and that's what we're going to cover off today. I'm Marty Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're Mad About Money.
We've only got a couple of minutes per topic, and we're going to not talk about any of those topics in any more than 2 minutes. First topic, Peter.
Good luck, Marty.
Maybe we'll go 4 minutes. The global financial markets at the moment. Your thoughts on what's happening?
Love every moment of the markets. Like our market was up, 4.5% last week.
Don't screw it.
BHP up 19%, Rio 11 or something like that. On Monday, BHP up 5.35%, Rio up 6.2%. So it's Tuesday. It's been great stuff, but the thing I really love is the fact that Doha was not a goha, and we still saw oil prices go up.
So let's stay on that. What are your thoughts on Doha? It seems like it was a bit of a non-event.
Well, I think if there was an agreement,
from a market perspective,
probably the oil price spike would have been bigger if there was an agreement. But the fact that they haven't gone, the experts thinking a 10% fall in oil prices, and I thought our market would open up 60 points down. The opposite. So that's a really good sign for the outlook for oil. Paul, what do you reckon?
Yeah, I think it's hard to actually get a really good handle on the oil market. I think people were so short. There's obviously some fall in production. I think, come back to our market, I think our market didn't go down a lot. We had just a buyer's strike which went on for about a couple of months. We've almost like a seller's strike the last month. I'd like to see some more volume on the upside first. I really want to see these top 20, Peter. I think the top 20 have got to move this market higher. Yeah. We're starting to see some signs of that, but the financials are still a bit of, if you look at some of the year-to-date movements, I mean, for example, Macquarie closed last December at $82. They're still $65, right? Now, all the things why Macquarie has come down, which is, things like, equity markets are in trouble, there's going to be less corporate activity, fewer, M&A type business, challenges in markets. With the US back almost on its all-time high, right? Sure, that stuff hasn't picked up yet, but it's got to pick up at some stage, you'd think. So why is Macquarie sitting down here at $65 when it was $82 on the 31st of December? So it's still pretty tough for some of the top 20 stocks out there.
Well, we do seem to be still trading in this range. We can't sort of get, sort of above, that sort of 5,200 level. What does the panel think are the catalyst to take us, to that 5,900 number that one of your colleagues spoke about?
Yeah, I think it's going to be the confirmation that China is looking better than expected. We saw it last week. I think that's put a bit of an...
And what does that mean? So growth at what, 6%? Or what are we going to be happy with?
If it's in the 6.5 to 2% band, last time it was 6.7. That was better than what doomsday merchants were expecting. I think that's helped commodity prices. Remember, what we saw in January, and probably the prelude to January, was that markets kept falling over the course of the year. And there were stupid things like Grexits and all that sort of stuff. But the bottom line was no one believed that America was growing strong enough to avoid a market sell-off. Everyone worried about China. All those concerns just aren't as strong now, and that's why we're moving into a 5,200 area, but we have to continue seeing good news to go to the next level.
Well, what do you see as a catalyst?
I think the first thing's sort of starting to take place. One is commodity prices have to bottom, and maybe we're starting to see that with iron ore above $60.
You think we've bottomed in commodity prices?
Yes.
I'd say we probably have bottomed. I mean, whether it's going to go back a bit, or I'm not sure from here, but it's looking like it has found a bit of a bottom. I think that's what's really important. I think the next thing's got to happen is people have got to start to love our banks a little bit, right? Because they just make up so much of the market.
We love to hate banks, don't we?
They love to hate it.
A royal commission into the love of banks.
And look, sure, things have changed, but if you go back again, look at where they were in December, look at where they are today. They're still 10 to 15% below where they were in December. Now, I think that we've got a really important data coming out when Westpac kicks off its reporting season in 2 weeks' time on Monday, the 2nd of May. We have ANZ and National Australia Bank following up on the days just after the budget. I think people want to look at those results, and if those results don't show a huge blowout in bad debts, which I don't think they will, then maybe we can get a more positive...
So the banks will be a buy then?
Well, I think they're in the buy territory, but the market is still not really pushing them that hard. If you think about it, I mean, Commonwealth Bank started the year at 82, it's still only closed yesterday under $75.
There's a lot of negativity around ANZ, isn't it, that you just sort of hear that on the streets?
The top 20 have to fire, so I think that people have got to start to really, as I say, love our central banks to get our market.
And I think
Let's move on. Next topic. We're going to talk about just on that point, the budget. So I'm just trying to keep the time here.
Yep.
Yeah, you're doing a good job, mate.
So thank you very much. Budget coming up soon. Obviously, a lot of talk in the press about what's going to happen. Paul, I'll throw to you first up. Your thoughts on what's going to happen in the budget?
Well, I think, first of all, I mean, the $16 million type over 4 years, which has been leaked.
$16 billion.
$16 billion. The Fairfax Press is full of stuff that we've talked about here in previous programs. So the Division 293 tax, that's putting the tax on higher income people with super contributions from 15% to an effective 30%.
Fairfax Press would love that.
Yeah, well, Fairfax Press leads with that today. It looks
Crush
like
the wealthy.
that's a no-brainer, bringing the threshold down to 180,000. A couple of things to note about that. It's going to catch a lot more people than that because it actually, your superannuation contributions are included in the definition of income. So effectively, someone earning about $162,000 roughly could be paying 30% tax on their super contributions. Plus, it's not just on taxable income includes what they call things like investment losses, reportable fringe benefits. So you could have a negatively geared property, but actually be only earning $100,000, and you'll suddenly be being tagged paying tax on your super contributions at 30%. We'll cut out a lot more people than they expect.
Yeah.
Pete, I'll go to you. You wrote an article where you said that Andrew Bolt was wrong about a lot of things, and one of the things that you mentioned there was Andrew Bolt said that the budget was going to be all bad news. You don't agree with that.
No.
What are you expecting to come out of the budget, and what are going to be the good news stories?
Yeah, look, when I want a right-wing commentator, I go to Andrew Bolt. Andrew's terrific when it comes to conservative politics, but economics-wise, he can be off the mark, and he's been saying that the economy hasn't been doing well. And so I ran through a whole pile of, so you go to Switzer Daily and see, but there's at least 12 really good pieces of news on the economy.
You're on Switzer Daily now, so you just got to check
We
it.
can refer to yesterday's article.
Okay,
Peter.
we'll refer to the article.
All right,
but
but
are you
the bottom
expecting
line
some
is
good news
this.
out of the budget? Give us the bottom line.
In the 12 months to February 2016, the budget deficit stood at $36.1 billion, down from $44.7 billion. So there's been a fall already, and a lot of that gets down to the Australian economy is growing faster than expected, the 3% number. So this budget has to inspire growth and jobs. It has to be wise. It might raise taxes in some areas and hurt the poor or superannuation people in one area, but it has to actually stimulate maybe small business growth in the
It's
other.
something to what Peter's about to say, because this is the bit he didn't. This was point number 13 he forgot about. I think the starting point for the budget deficit for this year and next year is going to be a lot better than people expect. Remember, the iron ore price is now over $60.
They'd forecast a lot lower.
My EFO only a few months ago forecast was $39.
Okay.
Aussie dollars up at 78 cents. So
Yeah.
you're right about growth. I think you're going to find that the deficit this year is not going to be as bad, but certainly the starting point for next year and the year after is going to be a lot higher.
That's
People are under. I think the
And I
news
say
in the budget
this
could be a lot
budget,
better.
you asked the question earlier, what will help the market? If this budget really is A, credible, and B, inspirational for growth and stuff, this will really be
So let's move on.
circuit
So
breaker.
let's move to the election now, and obviously, how important is this budget for Turnbull? If he butchers the budget, could Shorten be the Prime Minister?
I'm going to say no. I think
I'd say no.
I say no too.
I don't think
That could
Australians
be-
are
it could be-
dumb enough to do that just yet.
I think Billy Shorten is, to all respect to Bill Shorten, is still in that unelectable category. I think Australians don't really warm to him, and look.
Julia Gillard did do it.
Yeah, but Julia Gillard was different. She was the first female prime minister. There are all sorts of things. Her polls were very different. I think there's a difference here. So, look, I mean, I think it's the right wing press.
She had been strong as
she was a very good minister.
as a deputy to the Prime Minister as
Yeah,
well.
she was.
I think this thing about everyone's the Turnbull hasn't done anything. I think it's only the right wing press that come out with this. I've never met anyone on the street that says to me, "I'm really worried.
Yeah, I know.
Turnbull's the Prime
That's
Minister,
right.
he's not doing anything." You know,
They're moving that.
I think it's
The reality is
that
But I've
people
got some right wing friends who say that.
Yeah, look, I think people have been underwhelmed with what he's done so far.
That's a fair
but I think Australians are very easily underwhelmed.
They are very easily underwhelmed.
We're very easily underwhelmed.
I think the biggest problem he has is keeping momentum up and not getting, he's got to. Yeah, some ways it's just the length of the campaign issue. I think that's what my dog.
I think a lot of people are mad about.
So
Malcolm.
the election actually hasn't been called yet officially.
No, and he can't do that
until he has the budget.
Yeah.
Yeah.
And he needs to guarantee supply. He's got to actually needs a bit of legislation.
Moving on now, we're going to talk about some stocks. We're going to discuss the miners. Paul, you can kick it off.
Yeah.
Rio,
Airport.
BHP, we'll come back to Sydney Airport.
Yeah, Rio came out yesterday with lower production guidance. BHP's also come out this morning with lower production guidance. So in some ways that's not a bad thing. So they're saying their iron ore
Didn't
production
hurt the share price
is actually going to
did
be down by about 10 million tonnes. So if you actually think about where the price is, and price is probably a bigger impact than production for these guys. Both have said that they're finding it due to weather and other things with driverless trucks and other things, that they're not actually getting the ore out as quickly as they want to. Well, I think that's probably a good thing.
And was this one of the drivers why, if we go to Rio, lower production guidance, and back off your article on the weekend that talked about then when Rio trying to extend payment terms to suppliers? Do you think, do you see any correlation there?
I just think that some CFO has just got in his head that he needs to
save some money,
demonstrate some improvement in
Improve
working
cash
capital
flow,
ratio. But that was scandalous behaviour. BHP tried the same thing too. So, but look.
I think many big businesses have tried that.
But look, I mean, BHP's out this morning, so I think that we're probably going to see a slightly more positive response to this report. So overall production is down across the board in every category, but. Look, I mean, they're obviously having some struggles due to weather. It's actually a good thing they're not producing the ore as quickly, I think. So maybe that'll support the price.
And prices are going up.
Over $60 yesterday.
Supplies coming down.
Pete, I'll throw to you, and I'll come back to you, Paul, on Sydney Airports, but we'll just mix it up. McGrath Estate Agents, a group that we know well, they've been obviously clobbered over the last couple of weeks on the back of some underperformance and some negative numbers. Your thoughts on MEA?
Yeah, well, certainly, and of course that's a ticker code for McGrath in case people don't know. Look, I think there was a market overreaction when it went down to 90 the other day, and I said it on the final count on Sky that if this stock is not at least 99 by the end of the year, and it's a 10% gain for anyone who wasn't holding it, I would stand stuffed in Martin Place. But the bottom line is this, that the company did underperform and markets do sell off. But JP Morgan, at this very point in time, still has a target on the stock of $1.65. I think it was $1.60 or $1.65. So that I think was a market overreaction.
Yeah.
It listed at $2.10. It got, and it probably is $1.50, $1.60 stock, given the revelations. But Paul, you've looked at the numbers as well. Do you think the 90 cents was a market overreaction?
A little bit of an overreaction. I think the problem is, as I said, if you look at they're on track for the first 3 quarters. It's the last quarter that's hurt them. You take the last quarter run rate through and say what its projection for next year doesn't look as good. So I don't think we're going to see the stock back at $2.10 for an IPO date. So I think the market has softened, but some recovery is possible. Good to see John McGrath and his directors in there buying shares yesterday. I think that's a positive.
Supporting the company.
And they need
John
to
now owns 30% of that business. So.
And perpetuals there as well. So I mean, I don't know who the sellers are, but I say you may have seen a short.
And one thing I will throw in, McGrath's had a history of growing his business during bad times because he's regarded as a very good agent, and strugglers often don't market during tough times.
Let's move on to Sydney Airports now.
Again,
another stock
good data out this morning from Sydney Airports.
What was that?
So growth year to date on domestic passengers up by 6.3%, 9.9% international for total growth of 7.6%. So that's all good. And in March, compared to March last year, up 5.6%. Now remember, we're only picking on Sydney Airport. It's the only listed airport in Australia, of course. So, but it's a proxy for what's going on in that whole market, notwithstanding Qantas. I think the other point I'd just like to mention is that after Australia, China or Chinese national people from China are the second largest group of people using the international terminal.
1.3 million.
Yeah, and they're up 19.7% year to date.
Yeah. So how do these numbers then correlate with the recent announcement from Qantas, which was actually quite soft? So is there any connection there?
Capacity. I couldn't quite see why the market.
So when you say
the market just
capacity,
bought Qantas up too high. I mean, Qantas was I got out of Qantas at about $1.50 about 18 months ago. It was now trading at $3.90. People forget how
it went under $1 there.
It went under $1. So look, Qantas basically said they had a bit of their capacity was a little softer in March. I think
which they blame on consumer sentiment.
There have been problems also with Easter and the timing of school holidays in different states. They're all different. Victorian holidays were different from New South Wales holidays in Queensland. So look. Maybe they're losing a bit of share to Virgin and the others.
Sydney Airport's a buy?
Look, I don't think you can sell Sydney Airport on these numbers. I mean, the market's going to like this today. I think it's this is a monopoly business that's solid.
And pays dividends. But also one last thing: the Sydney to Melbourne route, one of the busiest in the world,
The third busiest in the world.
yeah, had a record 8.7 million people travelling in February. That's the best in 28 months.
There you go.
The other stock that got killed in this the other day was Flight Centre, down 4.5% on Tuesday. I can only think a reaction to the Qantas stuff, but I don't understand.
Well, maybe we'll talk about more about that next week. I'm Marty Switzer.
I'm Peter Switzer.
I'm Paul Ricard.
And we're mad about money.